What's going on, everyone? Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button because NIO is very well documented on this channel. And also make sure you hit that like button because it really does go a long way in helping out the channel. So like I said, today we're going to be talking about NIO stock. The stock is currently trading at $13.14, down 6.81% for the week. So yesterday NIO had their Q2 2020 earnings report, and I did a video on that. In my opinion, it was a 10 out of 10 earnings report. It went extremely well. NIO beat on revenue, NIO beat on earnings per share. Vehicle margin was actually positive. You went from negative to positive. Gross margin went from negative to positive. And those were the things that I was kind of looking out for in that earnings. So in the pre-market, what we saw with the stock was it looked like it was getting ready to run and it was really ramping up. As soon as the opening bell hit, that was some excellent price action. It was about an 8% increase. And not too long after, we saw the stock begin to crash. So what happened here? Why do I think the stock fell, in my opinion? And what's going on with NIO stock? What should you do? Watch this entire video to find out. So I have three things in mind that I think are affecting the stock price, okay? Number one, have you ever heard the quote, buy the rumor, sell the news? Well, that's typically what happens here in earnings reports. People buy the rumor. We have your breadcrumb chasers is what I like to call them. They buy into the stock. They know that there's a good earnings report. This earnings report was highly anticipated. So as soon as the earnings report is done, when the market opens, they get in, they take out their profit, and they take their risk off the table at the same time. So I think there was a group of people who did that, and then there's also people who FOMO bought into NIO and felt like they bought in too high, and immediately when they got the opportunity to exit the stock at a price like $15, which is almost pretty close to all-time highs, they're like, all right, I'm taking my money off the table, I'm taking my risk off the table. So I think there's that group of people who definitely brought the stock down. This brings me into topic number two. We aren't going to go too deep into this because number one, we're not here to get political, and number two, YouTube doesn't like when you get political. But love it or hate it, there are geopolitical tensions going on right now in the United States, and that's definitely going to affect foreign equities that trade on the NASDAQ, such as NIO. I hear this every day from people in my stock group. I hear this every day from people here on YouTube. There is a lot of fear and uncertainty surrounding investing in a foreign equity, and no one knows what's going to happen. So when they got the chance to, just like those profit takers over there, when they got the chance to exit NIO, maybe they felt like, okay, it's time to take profits and we'll come back when there's more certainty. Someone like me, like I said, I have a high risk tolerance. I fully understand the risks that come with investing in NIO at this time. I believe in the business. I believe they'll pull through. And no one knows if Chinese stocks are going to get delisted or not. So I'm just buying into a lot of people's fear. If I'm right, I believe that'll produce a great return. If I'm wrong, well, we all know what could happen. So I believe that's reason number two. There's that group of people who want to pull their money out of the stock market. They are focused on the election and politics and things like that. So there's that group of people there, and I believe that's another reason why the stock may have crashed after, in my opinion, reporting a 10 out of 10 earnings. Number three is probably the reason you need to pay the most attention to. This doesn't just go for NIO. If you're watching this, it's going to probably help you out and help you understand what's going on around the market right now. There is a rotation that I believe is currently going on. It's a rotation from growth and tech stocks, which have ran up so much in these past few months. You know, a lot of them are basically priced to perfection, and a lot of you guys don't want to hear that. When something's overvalued, something could be overvalued, but a lot of these stocks are priced to perfection. You know, they haven't left much room in for growth, and they've certainly left not a lot of room in for failure. Because I can tell you for sure, if NIO did not have a great earnings yesterday, then we would have seen a big crash in the stock. Thankfully we didn't, but there's a lot of people who are moving from tech to value now, and we're seeing a little bit of bigger gains in value stocks. So let's go over a few stocks so you guys understand that. Like I said, I am diversified. NIO is not the only stock in my portfolio. If you pay attention to the channel, you'll see what else I'm invested in. So first we want to look at like some growth or tech names. So let's start with NIO, okay? NIO is down 7% this week. Another stock that I hold, a company that I love, CrowdStrike Cybersecurity, CrowdStrike Holdings, that stock is down 12.66% this week. And I just made a video a while ago that if CrowdStrike hits $94 again, I will buy in. Well, yesterday it hit $94. I was not expecting that. I didn't buy in, and my strategy changed a little bit because now that we're seeing this rotation, I want to be patient with my money and I want to continue to build a cash position. Big name right here. Let's check out Microsoft. They've been in the news recently. We've been hearing about potentially a TikTok acquisition. The past week, Microsoft is down 1.5%. So big name. It's pretty tough for Microsoft to fall down. So let's check out Tesla. Tesla in the news yesterday, there was a 5-to-1 stock split that's going to be happening. So if you own one share of Tesla, you'll end up having 5. If it's at $1,500 right now, that'll be valued at around $300. But let's see, Tesla only up 0.65% this week. Usually when they announce these stock splits, what people don't understand is the stock is still has the same intrinsic value, but what it is that it's lowering the price. So psychologically, that makes newer investors or investors who don't have that much money feel more comfortable buying in to, let's say, a Tesla at $300 than buying in at $1,500. It's funny because you can fractionally invest and get the same result, but people don't understand that. So with more people buying in, that kind of pumps the stock up. We saw the same thing with Apple. If you liked Apple before, you should love it the same amount after the stock split. And we know Tesla's investor base is one that doesn't really sell their shares like that. So we need to have that same type of investor base with NIO over the years. NIO's investor base, in my opinion, is very immature. There's people who just jump in and out, try to make quick profits. So we just need it to mature over the years, and we need people who are going to sit with the stock long term. Let's look at some value stocks now. Warren Buffett's favorite for the past week, Coca-Cola, is up 3.3%. So we're seeing growth in that one. More growth than Microsoft, more growth than Tesla. So let's look at a different value stock. Warren Buffett loves Bank of America. I use Bank of America. Bank of America up 5.2%. Let's look at a different growth stock. Let's look at a different value stock. I would call Carnival Cruise Lines a value play right now, because if you're buying in on the hopes that the cruise lines will eventually recover over time, and they're undervalued right now, right? So let's go check on that one. Up 11% this week. So clearly there's a trend going on here. Value stocks people are kind of pouring into value stocks, and the market is having a rotation right now. So that's what I think happened when NIO started to crash. Obviously, all the tech names were pretty much going down. NIO had a good earnings. It went up a little bit now, but that wasn't enough to help it defy the trend of moving from growth and tech to value, in my opinion. So as a long-term investor, as someone who believes in the company, yesterday was a good day for me. The fundamentals were great. In my opinion, fundamentals will always have their day. There's always going to be these short-term things going on. The best investors, what do? They go long on stocks, and if it's a growth stock that you like, in my opinion, then I'm going to continue to hold it. I'm going to continue to buy the dips. I'm not going to be chasing value, but it might make sense to have a little bit of value in my portfolio. That's something that I think about all the time, but I'm still here with the growth stocks and the tech names because these are businesses that I understand, and I feel like a lot of times I can understand these opportunities way before analysts understand it by simply doing my research. So that's why I invest in innovation and disruption and things like that, and technology in the future. So I don't think the sell-off yesterday had anything to do with the fundamentals of NIO. The fundamentals actually improved, in my opinion. There's no one person who can point you out specifically why did NIO sell off. It had nothing to do with the earnings. The earnings were 2 thumbs up. I just wanted to make this video because a lot of you guys were asking me about this. So here it is. As always, thanks for watching. Make sure you hit the like button. Make sure you hit the subscribe button and leave me a comment down below. Catch you guys tomorrow.